Hi everyone, this is Rob Roy of Elliott Wave Options and welcome to TradeFinder Live. For those of you that are new with us, let me give you a quick rundown as to how this works. We will start off with this wonderful disclosure / disclaimer that the powers that be want us to share with you. In all seriousness, if you are new with us this evening, please take a snapshot of it and read it in detail in your leisure. I will highlight a couple of things that they want to make sure that we communicate with you. Number one, we are not registered to give individual investment advice in the United States. And two, since we have a lot of international viewers and a lot of international subscribers at Elliott Wave Options, any pricing that we're talking about is assumed to be in US dollars unless noted otherwise. So those are the two primary things. But again, take a quick snapshot of it. So let's go ahead and move into where we are in the market. As you can see, we have continued to move back to the upside. So last week was the 10th. So we had this big update that occurred on Monday based on the news from Pfizer. Now we have Moderna, and it says that basically the news is that their vaccine is even more effective than the one from Pfizer. And if you really read the details, there's some individual things that make it sound like maybe it is even a better vaccine than the Pfizer one. But really, it's kind of the same type of news. It's redundant, if you will. We already know that we have some sort of a vaccine. We'll see how many people actually take it. Likely, it's going to slow the virus some. They aren't cures. You know, it's preventative stuff, but should help things. So that part's out of the way. And then we still have the potential for a stimulus package. I saw some information on news sources today on what's being proposed. And I mean, we still don't have a quote official election. There's the lawsuits going on, but until it's December, it's the first week in December, I forget, but the exact date that the Electoral College certifies the winner, where the states actually send in their electoral votes. It's not official until that occurs. We'll see how it plays out, but it does at this point in time look like Vice President Biden is going to be the new president, which means that maybe a larger stimulus package than President Trump would have gotten through. A lot depends on what goes on with the Senate, and that's going to be interesting, isn't it? Because the runoff's not until January. And so we may not know who fully controls the Senate until then. And at this point in time, well, I think we can be pretty certain that this zigzag that's been qualified for quite some time is still in place. We've had this 381 target for a very long time. And in between there, we have this flat pattern that occurred. So the wave 5 that's extended further, we're still in the wave 5. That's clear. It's been relabeled with a new high. We actually have a new closing high that occurred yesterday. A bit of a doji today. We'll see how that plays out into tomorrow's trade. We're still a little bit overbought. It wouldn't be surprising to see a little bit more of a pullback. If you want this move up to the 381 level, then you would like to see a little bit more of a pullback. Let things calm down. But calming down or consolidating right on top of this previous high is very bullish. And you can see on the low of the day, we actually came down to that point, which happens to coincide with the 61.8% fib extension level to the upside. Maybe with that doji, we blast off tomorrow. There's a lot of news. I'm going to actually do a S&P update after this broadcast tonight. There's a lot of news stations, financial news networks that are talking about this, quote, melt up. And we'll go into detail as to what that actually means. But it gives you a little bit of support for the fact that we could go up and hit that 381 level. And based on the angle of the zigzag, you can see that occurs right around the beginning of January. And that's when everybody comes back to work. You have the holidays with lesser volume. So we're entering into a seasonally bullish time for the market. It would be unexpected to see some sort of a big downward move. occur now, and moving up and hitting that 381 target around the beginning of January, that makes a lot of sense. So that's the one thing that would be concerning, isn't it? Is that it all makes a lot of sense. It all kinds of adds up that, you know, we hit that extended sea level target. We had the complex sea wave in the wave 5, all these things, and then we move up and hit that level right around the beginning of the year when things could very well change. It's almost too perfect of a scenario. So that keeps you a little bit nervous when you see things like that happen. So that's the general of the market. Again, watch the S&P update. I'll go into more detail on that. But something else that I wanted to share with you this evening is looking at financials. So let's take a look at the XLF, which is the ETF for financials. And you can see that we held that gap up that occurred on the 9th pretty well. Not much of a move back to the downside here. And this is a good example of when I talk about getting overbought, when we have great separation from the 10-day moving average, we don't always come back down. I've actually had some subscribers send in questions recently talking about trade alerts and should we wait for a move to the downside to enter, etc. And this is a perfect example of how sometimes you really just kind of consolidate sideways, and then we continue to move to the upside. So financials are moving up. Why are financials moving up? Well, here's a really good chart to explain why. This is the 10-2 Treasury yield spread. So it's the 10-year versus the 2-year. If you approach 0, that means that the 10-year and the 2-year give you the exact same yield. So that's obviously not a good thing, right? You're supposed to make more money, are supposed to get a higher yield, a higher return for holding a treasury longer. You're not supposed to make the same amount of money holding a treasury for 2 years as you would if you committed to holding it for 10 years. So moving down towards 0, not a good sign. And that's what happened as we approached March, the bottom of March here, before we started the move back to the upside in the end of March and towards the beginning of April. So now we're at 0.72, and note what's happened over the past maybe 2 months from September up till now. We've been on a pretty steady incline on the 10 versus 2 yield spread. If you want to know what the average is 0.93, and usually the low is around 0.23. So we exceeded the low. We almost approached 0 in March. Now we're heading up, but we're not even to the average of the 10 2-year spread. So that's where the financial sector can be a good place to start to look for alerts. And just to show you, and I'm kind of getting a little bit ahead here, but I think this is something that is important to tell you. I was going to go through this later. This may very well be our case study. Can everybody see that? Are you seeing the trade alerts here? I'm just making sure. I know I used to have to.
Hi, Rob. Yes, we can see those.
Okay, thanks. Since I changed the screen, I just wanted to make sure. Zoom is pretty good about that, because before I used to have to go reshare the screen. But look, on OZK, that was an alert that was sent out. Look, we're already plus from the time that the alert was sent out. We're up 11% from the time that the alert was sent out. That's pretty good. Isn't it? You like it when that happens. So I'll come back to this in a minute to show you our current case study alerts that were closed out. But it gives you an idea. We're looking in the financial sector based on this, and this really shouldn't have a whole lot to do with what goes on between now and the end of the year. Do we get a melt up? Do we retrace a bit? Is there nervousness going into who's going to control the Senate? Because if you remember, if you watched the last S&P or the previous couple of S&P updates, the market doesn't like it when one party controls everything. The presidency, Congress, it doesn't like that. So if there's some sort of split in Congress between the House and the Senate, that's when the market performs the best historically. Nothing's 100%, but historically that's true. So the financial sector is a place to to look. And I wanted to share that with you. In this TradeFinder, we go through case study considerations, and we've had a pretty good record if you've actually followed those. But on our website, we actually send out alerts. We tell you when to get in, any adjustments to make, when to get out. And on top of that, we have education, all this. We just recorded 2 new educational pieces that I'm really excited about. One is on the triangles, and then we recorded a master's class on the ADX, which is part of the DMI, my favorite confirming indicator for Elliott Wave. So we continue to add educational format, because our goal at Elliott Wave Options is not to be just an alert service. What we want to do is to be an educational service. We want to teach you how to trade on your own. When I first started trading, my motivation was to be a full-time trader. That's really what I wanted to do for a living. No joke, that was my motivation. And so I went out and I looked for mentors to find somebody that had been doing it. The first mentor that I had wasn't so successful. I made some money in the beginning and then gave it all back in a very short period of time. But then I found one that had far more years of experience, and that turned out to be the right scenario for me. That kickstarted my career to the point where it could be sustainable, realizing that going after the pie in the sky gains is not going to get you where you want to be over the long term. It's great for marketing, but it's not how you become a successful long-term trader. So that's our motivation at Elliott Wave Options. If you considered being a subscriber, now would be a good time to take a look at it between now and the end of the year. Go ahead and kick the tires. We don't have any sort of a requirement from a contract standpoint. It's month by month. You can cancel at any time. So just give it a try for a month. This would be a couple of good months to give it a try. So I wanted to share that with you, the XLF, the financial sector, and then finding and identifying individual trades. So OZK, you'll see where that came from in a little bit when we go through our search. All right, so now let's go ahead and go back and look at the couple of case studies that we did close for our subscribers. One of them was on CYX, and that was one that we looked at here in TradeFinder 2 weeks ago. So did you follow this? So here we are. We looked at it on the 3rd, the very next day. We sent this out as an alert. And here was the setup. There was the pattern, if you aren't familiar with it. And boy, wait till I show you where it is today after what's happened the past 2 days with this. So there was the setup. We had a very low ADX, historically low for CYRX. So when you get to the point where breaking under 12 is historically low, you know you got a fairly volatile stock, because sometimes the ADX gets down to 9, 8, 7 in that range. So for this to be historically low shows you that the stock moves. Well, that's what we want when we're setting up a strangle position. So we had a really nice Elliott Wave descending triangle here. This brings me back to the triangles that we just recorded as far as our education. Some really good stuff in there. And then we get the breakout, and literally in 6 days, you returned 48%. So that's right in our range. Our strangles usually return between 30 and 70%. That's the range. Normally it's about 28 days. So to get one in 6 days, you've got the average return, but in a very short period of time. Look at that breakout. Wish they all would move that way, but obviously with an average of 28 days, they don't all break this vertically. But you know how I feel about vertical breakouts as well. What happens? When something breaks vertically, what happens from there? We tend to, what goes straight up usually comes, yeah, straight back down. Hopefully that's what you said. So let's take a look at where CYRX is now. And look what happened. So there's your move right back to the downside. And for some reason, it's not showing today's move, but today it moved down another $4. So that's yesterday on the 16th. But today it actually moved down. Oh, I know why I haven't run the update yet. So it's down another $4. So it closed at 46 is where it closed today. So now we're all the way back to here. Do you see why I don't like vertical moves? It's great when we have a triangle pattern in our strangles. You get a vertical breakout, take the gain. Don't get greedy. Perfect educational experience here. How far are you going to run vertically? Take the gain. Don't be greedy. Don't be a pig, as Kramer says. I can't believe I'm giving him any airtime, but
Hi, Rob. Sorry, just to interject there. If you hit the go button or do an on demand, it should update the data for you.
Oh, okay. Thank you. See, that's why we have support, because I'm not technically inclined other than looking at patterns. So I appreciate that. Thank you. So there we go. There we are back down here. So you can see what happened. Vertically up, vertically back down. And now you can look at this and say, well, gee, did you hold on to the put? Did you close the call and hold on to the put? Nope, we didn't. We took the whole thing off and kept the entire profit. Why? Because there was still over $1 in the put. That's how much premium is juiced into this stock. So when you have that much premium, we tend to keep it. The decision point is around 35 cents, if you're wondering. So when you get a breakout one direction, if there's 35 cents in the opposite option, in this case, if there was 35 cents left in the put, that's the point where you make a decision. Do we want to sell it, or do we want to hold that and see if we get a reversal? Because triangle rules, Elliott wave corrective triangle rules, are you are going to retrace the breakout. But just as when we talk about gaps getting filled and we don't know a time frame of when gaps are going to get filled, same thing occurs with the retracement of the triangle. There's no time frame rule as to when that move back to the breakout point will occur. We just know that the breakout will be retraced. If we had that information ahead of time, boy, we could double or triple our returns, couldn't we? But still, we made a nice return in much shorter period of time than what normally happens. So that was a good one. The other one that I wanted to share with you is also in our volatility portfolio. And this one is on TAL. This was a little bit different. This is a really good one to go through and use as an educational resource. So here was our entry on TAL. And if you're wondering what this is a China company. It's a China company that does home education. You know that a lot of the students here are using, a lot of them are using the same couple of programs for their online homeschooling. And so this is the Chinese version of that. That's what TAL education is. So we had a really nice triangle following a big run up. That's my favorite pattern. We talk about that in the educational series that we just recorded. We'll have that on our website soon. Here's historically low ADX. See what I was talking about before, where CYRX breaking below 12 is historically low? Look where this one is. This one's down at 8. So this is a perfect illustration of what I was just talking about, where the ADX, what often will get lower than that. So we had the ADX down here, and it was starting to break to the upside. So it's kind of saying something is getting ready to happen. So that was a really good entry point for that. And it did break. And the breakout moved to the downside, but it kind of stopped. We started down, and then we started to consolidate. And we consolidated in that sideways kind of a blast off formation that I talk about, the launch pad effect, if you will. And you can see why. We got down to the 200-day moving average, which is an institutional support average. The 10, 30, and 50, that's what traders use. But institutions, money managers, those that buy and hold, those type of people look at the 200-day moving average. And as long as something stays above the 200-day moving average, they'll hold on to their position. In fact, quite often, if you get close to breaking the 200-day moving average, because all the institutions know that they're all looking at that, if you break the 200-day moving average, you usually get a pretty high volume sell-off. And nobody wants that if you're an institution that holds this stock in your portfolio. So they tend to come in, buy, and support it. So all those things are going on and being considered. And then our shortest term confirming indicator that we have several confirming indicators that we use at Elliott Wave Options to complement Elliott Wave. The quickest, the shortest term one is the CCI. That one's boom, that one's right with the market. Well, look what's happening. There's divergence here. The stock is still going sideways. And for quite a while the stock's been going sideways, the CCI has been moving up. So that's positive divergence. That's telling you, hey, we're getting ready to move to the upside. Well, the issue was we hadn't generated a profit yet on the put side. And normally what we will do is we will hold one of the legs until it hits at least break even. So people are always saying, well, why don't you take one leg off? Well, if you take one leg off and it reverses, this is going to be a perfect example of that, you can risk losing everything. So we don't tend to do that. In most cases, you know, nothing's 100%. Every situation is different. But in general terms, in most cases, we're not going to take the one leg off until it is generated break even. So we've taken the risk off the table, and then we can hold the other one kind of as a lottery ticket and see if it jumps back to the upside. So here we went ahead, but these signals were telling us we're probably getting ready to go back to the upside. So we went ahead and sold the put. You can see the order here, sell to close. So we sold the put, and that left us with just the call option. Well, the call option didn't have a whole lot of value, so we added to it. So we added 7 more contracts, which gave us a total of 8 contracts of the call to the upside. And you can see they were pretty cheap. They're only 35 cents each. That's why we bought so many of them. So we sold the put, we added to the calls. So now we have 8 calls, and as what we suspected was going to happen, the stock moved to the upside. So there was our basing. We got the blast off move. That was a precursor to the 9th, and then boom, back to the upside. Well, now we're at major resistance. Look at this resistance area at 75. But if you've been with us, or if you're an Elliott wave enthusiast, you're probably looking at this and saying, why would you close the position out now? Look where that wave 5 is. It's all the way up at 95. We're only at 75. You have 20 more points potentially to the upside. Why would you get out now? Well, time is always a factor. And we've already had the downward breakout. We took the puts off. We added to the calls. It worked out great. We generated a nice gain in the position. And now we're at major resistance at 75. How long are we going to sit here? Every day that goes by, tick, 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 that's taking premium away from the calls. So what we did was we went ahead and took that position off, but we sent out a note to our members. Now we do every week, like we're doing here in the TradeFinder, every week we do on Thursday nights a webinar just for our subscribers only, where we go through in detail every single alert every single week. So every open position that we have, we go through, and anything that we've closed throughout the week, we go through those in detail. Well, that's on a weekly basis. Well, what if something happens intra-week, if you will? So I wanted to share with our subscribers just what I just told you, that we went ahead and took this profit, and you can see we returned 37%. So we're in the 30 to 70% range. Well, no, this one went a little bit past the 30-day average. So we were starting to get a little bit long in the time decay. That's why I was saying every day, tick, tick, tick. Now time decay becomes a concern. So we generated a pretty nice gain right in our average. Time's starting to become a factor. And so I told the subscribers that, hey, we're at major resistance here. The stock may go sideways. We don't really want to wait that out. But this is on our watch list now. And if we can get a meaningful break above this area here, above this 75 range, and then we've got some resistance at 80 too, right? So really, it would be best to see it break above 80. So if we break above 75 and above 80, we still have 15 points to go to the upside before we hit our wave 5 target. And now if we go to 95, what have I talked about? It's almost kind of the same thing as the 10-day moving average rule now. The tractor beam thing, where the whole numbers tend to just draw the stock towards them. So $100 a share is only 5 points away. Difficult to believe that we're going to go to 95 and not go to 100. So really, if we break above 80, we have 20 points more to go. So let's take the profit now and then keep an eye on this, because it could go sideways for a bit here. It's just too many months where that 75 level acts as support resistance. Too many months there. Let's see what happens over the next maybe week or two, whatever. And if we break above that, then we will be sending back out, because that would be a look at the wave 4, 50% correction, spot on, dead on Elliott wave stuff here. So you couldn't set up any better than this right here, other than the time consideration. So that's the plan for this. We'll keep an eye on it. We'll see if it breaks above that. And I wanted to share that with you, that the communication that we have with our subscribers is more than just the one-on-one. And by the way, all of our subscribers can ask questions through email. They can email me directly. They can ask questions live. They can literally voice ask a question or type it in on our Thursday night meetings. We like to keep the interactive communication as open as possible with our subscribers. But in between that time, we don't want to just wait when there's information that we would like to share with them. So some things that I wanted to show you there, and that's where we were over the past week as far as closing out alerts. So CYRX was one that we looked at 2 weeks ago. Now, last week, I know we struggled to find something, and looking at my notes, if somebody remembers what we found last week, because NSP was 2 weeks ago, and that one did great. There's no reason for you to still be in that one. CYRX should be closed, but I didn't write anything down for last week. Did we have something last week? Did I miss something? Anybody? I just don't think that we found one. I think that was a rare week where we just didn't have a case study consideration. Okay, well, nobody else is saying anything either, so I guess I think we just let last week go. I just want to make sure that I didn't forget to write it down or something, because I'm learning that's what happens when you get older. If you don't write stuff down, you forget it. I used to have the greatest memory in the world. David, I'll get to your question on OZX. No, I don't think it's too far away because it pulled back today. That was the reason that we entered it today, was because we had a little bit of a pullback. I would have thought yesterday was a little too far away. We pulled back today. I don't think we're too far separated, but we'll take a look at that in a minute when we look at the results to try to find the case study for this week. So yeah, I just don't. I'll get to, you guys are asking a lot of questions. Pankaj already covered XLF. So let's take a look at look what we added here. Some really cool stuff. So over here in the searches on the left-hand side, you can see that we had our Elliott wave option searches. Those are basically searches that we've incorporated for our subscribers. So if you have ProfitSource and you're an Elliott wave option subscriber, basically you get all my searches too. So again, the education of following along. Quite often our subscribers will run the search and they'll ask, why did you pick this one? Why didn't you pick this one? That's good information, isn't it? That's helpful for people to go through the educational journey of not just understanding why an alert was selected. We cover that pretty well, but why wasn't an alert selected? Why did this one that showed up on the search, why wasn't that picked versus another one? That's a great learning experience as well. So what we've done, or what the people at ProfitSource have done, is they've added some more search parameters. And this is really cool because you can do both. So we have 4 impulse stocks here. So we can click those. And then we also have now stocks that are bullish and in a wave 3. So we can click both of those to see if we get any results. And look, now we have one where we know qualifies under all the confirming indicators, because remember, the search is based on the confirming indicators. It doesn't have Elliott wave in it. In the past, what we would do is, or what I do every day, is I run the search and I find the list of stocks that are a go, if you will, of all the confirming indicators. Then we put on Elliott wave to see if the Elliott wave pattern warrants putting on the position. Then we already know it has support from the confirming indicators. Well, now we can do that and make sure that it's in a wave 3. So let's take a look at this one. GNTX, look over here and see. I know I've seen this one before. See if it's liquid. Yeah, there's liquidity here. Yep. Liquidity is not a problem. The only problem is the expiration months. We go from December, which is really liquid, all the way to March, not as much. But wow, what a great looking pattern. How cool is that? Now, so now you can run the confirming searches, and you already know that you have a heads up. If you know anything, or if you've watched any of the recordings that I've done, what I love is to find a zigzag pattern in a wave 3. To me, that's the best of the best as far as moving to the upside. And you can see the DMI is really good, maybe getting just a little bit long in the tooth, but we're also getting pretty close to the target. But look at that zigzag there. Let's see if that's a qualifying zigzag. So we start here, measure the top. That's a little, okay. We're right in that area. Where is the extension for 161.8? Right smack through the middle of that. How about that? So there's a great chance we're going to 35.5. We're trading at 33 now. That's not a big move from here. The spreads aren't wide for December. If we go out to March, which is, they're not wide in March either. Yeah, you could just do straight calls in March. The spreads aren't wide, even if you got filled at the ask, which you should never get filled at the ask. You should get filled somewhere in between. But yeah, that would work out really well. So that's going to be a consideration for this week, utilizing the new formulas. Let's take a look at the 10-day moving average. Now here's where question comes in, and one of our subscribers asked this question as well, that when we see this, should we wait a day? Should we wait a day for the gap to get closed between where we are and the 10-day moving average? And you know that I'm really big on no security in any time frame gets very far away from the 10-day moving average. You've heard it till you're blue in the face, I know. But it works. That's the reason that I say it so often. The issue becomes when you wait, and of course we have to wait till what happens tomorrow morning anyway. We don't know whether we're going to open higher or lower, but stocks can stay overbought for a period of time. When they get overbought, we know one of two things is going to happen. It's either going to go sideways and let the 10-day moving average catch up, which isn't a bad scenario because probably volatility comes out of the options, or it's going to pull back down towards the 10-day moving average. In this case, it could come back down and test that 100% extension level because we kind of just blew right through it yesterday and today. So it wouldn't be surprising to see it come down there. But as what I shared with one of our subscribers in an email exchange is what I'd rather you do rather than waiting and hoping that it retraces back down is put on a smaller position. Everybody has their own risk profile, right? Or at least you should have. You should know based on your account size, how much money you're willing to put at risk in every single trade. At Elliott Wave Options, we do $500. $500 max of risk per alert that we send out. And so we're looking for, if you had a $5,000 account, that means we could have 10 alerts at any one time. So that's kind of the gist of our risk management system. You formulate your own risk management system based on your own account size. But if you don't have one, that's a big mistake. First thing to do is, what's your account size? How much are you willing to put in to each potential alert? 5% is a pretty good place to start, somewhere in that area. But go through and create a system if you haven't already. So furthering the thought, rather than waiting to see if we pull back or go sideways, I'd rather put on a smaller position so that you're in something. Then if it pulls back, or then if it goes sideways for a while, then add to it until you get to the point of where you are on what you would put max per trade that you encounter or that you put on, so that you don't miss out if it just continues to go vertical and hits that target and then goes through the corrective process. So just a suggestion there, something to consider in the process of going through and finding or deciding. The question from the subscriber was a really good one, so I wanted to share that with everybody. The alternative thought process of just putting on a smaller position and then being able to add to it after that. Well, let's go through and look at OZK, which was on the list yesterday. OZK. And so the question was asked, was that too far from the 10-day moving average? Well, yesterday it was. So that's pretty good separation there. That's even more than what GNTX has, but it's pretty similar chart, isn't it? But then here's what happened today. And so we got in before we rebounded. So the stock closed higher than where we entered, which is why we were able to get a little bit of a head start, if you will, of being profitable on the first day. We'll see where that goes, but maybe it continues to go sideways or down from here, but we have really good support right there at that 28 level based on the highs back from early June. So if it breaks below that, that's probably not real encouraging for a continued move back to the upside from here. And then if you look at the DMI, you can see on this one, not quite as high as on GNTX. We haven't even really gotten to 32 yet. So we're just breaking above the 25 range, heading up right around 30. Good separation between the two directional indicators there. So this is one. So I'm going to write both of these down for this week. Obviously, I'm going to write down the OZK because I found that good enough to send out to our subscribers. Can't give you the exact trade because I can't give you individual investment advice, but if you're paying attention, you saw it as we were going through the education part. So for 11, 17, we're going to look at two of them, make up for last week. So we'll do OZK and GNTX, and we'll see how those play out throughout the week. Both of those look pretty well, but isn't that really cool how you can go through and set your search up in the wave 3? So now I can find my favorite wave. So many Elliott wave traders, Elliotticians, if you will, say to stay away from the wave 3. And I just think that that's a mistake. We all know that wave 3 is the strongest wave. If you can find a zigzag pattern to give you some rough idea of where that wave 3 could end, that's a great wave to trade, not one to be avoided. All right, so let's take a look at some of the suggestions that you have. UAO on keys. I don't know if we have that. Exchange. We'll take a look at BIDU. I don't know if you happen to see the release they were talking about today, Warren Buffett's disclosure from the September quarter, F filings, if you will. BIDU is one of his favorite holdings that he has right now. So there's a little bit of a comforting note. So we had this back here for our subscribers, and we had this triangle, and so we took it off on the breakout. So we're out of this already for our subscribers, but it looks like it based for a while, tried to break up, came back down today, and looking at the DMI The concern here for me would be that ADX is so high. It's above 40. The positive directional indicator is dropping down. It's just, there's a lot of support. So if you had a position on right now, or if you're wanting to initiate one, the stop would be at 140. That's pretty clear there that that's a support resistance area. The low today got down to 141, so it kind of got down to it and bounced up. If it breaks below that, that would be concerning, but it could come back and test the breakout point of that triangle, the rule that we just talked about, or we could continue up. But you want to see the ADX could go above 40, but it's just once it gets above 40, that's when you're like, okay, let me see. The strongest part of the move is over. It doesn't mean the entire move is over, but it means the strongest part of the move is over. So maybe at this point in time, we want to step back a moment and see if this is something we really want to enter. But if the positive directional indicator can get back above the ADX, that could be movement to get up to that wave 5. We'll have to wait and see. ABUS. I don't know what this stuff is here. If that has anything to do with COVID, drugs, or vaccine news or something here. Arbutus Biopharma, interesting name. The DMI looks like we've based for quite a while here. And maybe we want to go to the upside a bit. The DMI is showing that we could continue higher. Just this kind of stuff throws the charts off. The Elliott wave algorithm doesn't really know what to do with crazy stuff like this. So when you see that, it makes you step back a bit and say, that's pretty bizarre activity there. You got all these little bars and then just 3 days of insane bars. So not sure what happened there, but the DMI does look like there's some strength building on this move, and that you could continue back to the upside. JETS. Already looked at the XLF, Pankaj. So long term, you want me to look at the weekly chart then? If you're looking into 2022, so you're looking way down the road. It looks really good right now with the DMI. The ADX is breaking, about to break. It's already broken above 20, about to break above 25. Really good separation between the two directional indicators. It looks good for the short term. As far as the long term, the weekly chart, boy, it went for a long time where it did absolutely nothing. Then it broke down and starting to build back up a little bit of a triangle there. Again, a couple crazy bars in there. Back in the March timeframe, which makes sense because the whole market was nuts back then. So we've had a little bit of a breakout there. It's not the greatest weekly pattern that I've seen, but the DMI is starting to show some interest. So the ADX came down to an area of support right through here, bounced off of it, moved to the upside. It's showing a little bit of confirmation there. But according to the rules of the DMI, the ADX needs to get above that negative directional indicator so that it's between the two. But when you compare that with the daily chart, that looks good. As far as going out to 2022, just pure speculation would be possibly if we continue to move higher and this chart gets relabeled, because that's not really a good Elliott wave chart, is it? I mean, it's labeled, but that kind of stuff there, flat after flat after flat, boy, if you ever wanted to do an at the money butterfly, that's what you're looking for. But how do you know that's going to happen at a time, that you're going to get that many flats in a row? That's like a triple flat, which is pretty rare. Perfect for an at the money butterfly, but pretty doggone rare when you see it. James is asking on TAL, was it the first part of the move to the upside back in October? Well, a little bit, but not a whole lot. So we had a little bit of a symmetrical downside, moved up, wasn't enough, and then the move to the downside. So either one of the moves didn't give us enough to take the other one off. Mike, yeah, we've got the super cycle that's the same as what you're seeing. So we actually did a video on that, a YouTube video on the super cycle, where we're kind of right at decade highs. It's something that you have to keep in the back of your mind as far as where things go. And it could be far more than just next year being a down year. That's why the speculation of, if we make it to 381, we do go a little bit above where the wave 3 in the super cycle high is. But after we get to there, it's considering that it's a whole new ball game as far as where the market goes. Everything's going to have to be reevaluated. I think at that point in time, we are again moving into the seasonally bullish time of the year. But yeah, that super cycle is out there, and certainly not too far away from the super cycle high. James, so you disagree? You think Ozark was too far away from the 10-day moving average? Well, you certainly have your right to your opinion. MNST. Monster Beverage. There's the ascending triangle pattern. So that would be a really good. Let's see, where's the ADX? Well, the ADX is showing pretty good confirmation on this move to the upside. So that's leading you to believe that we are going to break out of this ascending triangle to the upside. I think we're close enough that I would want to see the second day, because today is kind of a breakout day. I would want to see that confirmation day, the day we had here on the 9th. It couldn't hold that. So it was up with everything else in the market that was up on the 9th. It couldn't hold it. So it's gone back and gathered energy. We're trying to break through it today. If we closed again above that area, then you could have the clear up to that wave 5 high. And again, you're so close to 100, stopping at 98 seems a bit far-fetched. Seemed like it probably would go to 100 from that point in time. We've had Monster Beverages and Alert in the past, so we'll see that. Tesla, certainly couldn't have any sort of a webinar without looking at Tesla. There's your breakout today. I imagine you saw the news. Now, we've talked about this in the past where we had this triangle here. And if you didn't see it, or if you haven't talked to them, we talk about this in the triangle class too. So we had breakout here that turned out to be a false breakout. Then you break to the downside, and then you come back up. You don't have false breakouts in two directions. It doesn't happen. You can have a false breakout in one direction and then the big move opposite, or test it and then move back to the upside, but you don't have two false breakouts. When this scenario is occurring, what you're doing is building a larger triangle. So again, we cover that in detail in the new triangle class. So we broke out today on the news that I guess Elon Musk did whatever the regulators wanted because they got turned down for being in the S&P 500 before, but today they're going to be entered. And so now Tesla is going to be an S&P 500 stock. So that created the breakout day. So you know what comes next? We have to have the second day, a follow through, or confirmation day. So we'll see how that plays out tomorrow. But that's just, you know, it was before, it still is a really, really extremely well formed triangle. And the ADX hasn't really given it too much consideration up till now. It's trying to curl up. We'll see how it plays out. The buyers took control today, but that's expected because when you go into the S&P 500, anything that's an ETF index, something that mirrors the S&P 500, has to buy the stock. So to follow their prospectus, they have to buy it. So that's why stocks go up when you hear of a stock going into the S&P or going into the Dow, whatever. Institutions are forced to buy it if they are mirroring what goes on within that index. So that's what generally spurs it on. See if that's a catalyst to keep it going to the upside, which would be an amazing show of strength after the split that occurred. But we can see GNRC. Is that after hours, Siren? You said it's down 10%. Is it down 10% in after hours? Or are you just talking about from the high? Because that pattern still looks good. You know, the DMI is not too excited about it, is it? It's still in a wave 3, but that's not something that we would look at because we don't have the confirmation. CCI still heading lower. Yeah, this would not be one that we would look at to enter at this point in time. There's still more room on the CCI before it gets down to this area of support around minus 100, and we're not seeing any sort of confirmation out of the DMI. So even though it's in a wave 3, that's why we have the confirming indicators. That one I just can't see moving into at this point in time. So XRT. So here's something that you would think about. Boy, that chart really looks a lot like the market, doesn't it? Looks very similar to the market, where we had the high here, then we go through this flat pattern, and now we're moving to the upside. 88% extension was just a little bit above where the market is at 85, but boy, those patterns are really, really close to each other, which just show you how important the consumer is to the S&P 500, doesn't it? I think this is a good example of that. At this time of the year, you know, you're moving into a year when retailers make their money. We'll see how they do this year, what kind of a holiday season we have. Probably going to be a lot of online shopping still. We have the ADX trying to curl back to the upside, but not between the two directional indicators yet. But if you think about it from a fundamental standpoint, it makes sense that we should move up over the next 2 months with the holiday season. The easy stop loss is the support level right there at 55. So if it were to break down below 55 without showing strength from the DMI, that would be a signal to exit the position. But for now, it looks like it potentially wants to go up at least to 100% wave 5 extension. So obviously, it's kind of a precursor to how the market's doing. I'm glad to have you, Constantine. No worries on being late. So let's look at Boeing. And then NEO is next. NEO's one we've been watching, and I wanted to show you that one to show you why we didn't do anything with that. Boeing has done, I mean, I was having a conversation back here. This just is an example of the psychology of trading back here, where I was talking with a trader friend, and it was in March when it was breaking down, and we said, wow, Boeing just broke below 90, and the low was at 89, and the guy said, I wouldn't touch Boeing with a 10-foot pole. And I even made the comment, well, if that's not a signal to buy the stock, I don't know what is, you know, kind of in jest, joking. But it's interesting when somebody gets to the point where their opinion is so strong in one direction, it's not unusual to see things move the other way. So I literally said that, but did I do it? No. Didn't follow through on it. And then look what happened right after that. Right after that, it makes 100% gain. It goes from 90 to 180 in a week. And I was like, golly, should have listened to my own voice there with somebody saying, I wouldn't touch that stock with a 10-foot pole. And then it turns around and makes 100% gain in a week. But that's the psychology of trading that plays in, isn't it? So I don't know. Just a story I thought was interesting. Probably don't care about it, but we went nowhere for a while. And now starting to move back to the upside. And that's pretty interesting to see it move higher. We really don't have a 5-wave pattern here. We just have a bunch of movement. Let's see if that's a qualified zigzag. It is barely, but it's hit its target. So with that retracement of only 34%, 61% would be your target, which is where we are now. So we would need confirmation. Oh, the DMI does look good. I was going to say we would need confirmation from the DMI to show that we have potential to reach the extended C-wave target, which would be 228. But the DMI is showing you have that. So another consideration is that's basically just marching back to the highs from June. It looks pretty good to move to the upside from here. It really does. NEO. Now, NEO reported earnings after hours today, which is why I said I don't want to go anywhere near it. Moving into not a stock that's this volatile. Now, we've had good success with it. We've had a couple really good alerts for our subscribers with NEO, and it's still in the wave 3. Now, this doesn't count the after hours trade. And at this point in time, after hours, it's down a little bit from the close, but not a whole lot. They were expected to lose 17 cents a share. They lost 12 cents a share. Did they beat earnings? Technically, but they still lost money. So they didn't really blow things away. So after hours is kind of ho-hum, just slightly down from the close, but not a lot. Your stock was way up until the last hour of trade, and it traded down the last hour, moving into earnings. So I think you want to see what happens tomorrow. How do things play out tomorrow? Looking at the DMI, you can see that the ADX is just sky high. It's interesting because the ADX is above 60, and even though the range on the DMI is from 0 to 100, just got done recording that an ADX reading above 60 is very rare. So here we are, above 60. It's, boy, that's just really difficult to go long at this point in time. So why didn't we do a strangle? That's what I looked at. There's no strikes. You can't go far enough out of the money. The only strikes they have that are available, because remember, they create the strikes way ahead of time, you know, sometimes a year ahead of time. The strikes that were available didn't go low enough to meet our risk tolerance or our risk qualification mandate. So there was no strangle to be had. You couldn't get far enough out of the money. In fact, you really couldn't even get down to the ideal deltas based on where the strikes were. So there was just no trade to make here, even though I tried, even though I looked pretty hard at it, it just didn't exist. So that's why we didn't do anything with it. But as far as where we go now, if I was long, you know, it's hard to get rid of it. We'll see what happens in tomorrow's trade. But with where the ADA, it's hard to see it moving to the upside much from here without some sort of a rest period. We'll see how that plays out. Second person, let's ask for PALANTIR. What's the symbol for Palantir?
That's PLTR, Rob.
Oh, okay, thanks. Support remembers it. I don't remember it. You guys like these? You like these high momentum things, don't you? It doesn't have a lot of history for Elliott wave. It shows that it's in a wave 3. Looking at the DMI, and it's hard to give a lot of credence to what the indicators show with so little history, with the fact that, you know, we've been public for a month and a half. You know, it's one of those high risk things. It's high risk, high potential reward. It does have an Elliott wave target up around 21, 22, but we wouldn't do anything with it for our subscribers. There's not enough history to show anything there, but it did move up, consolidate, and broke up again. So from that standpoint, maybe it does make that run up to 21. Maybe it continues from there. It's just, for what we do, it's difficult to go long there. That's more the Robinhood type of trade. Gold and silver, and then we'll wrap things up for tonight. GLD, we're still waiting for GLD to figure out what it wants to do. Talk about gold and silver a lot as stocks that consolidate, break out, consolidate, and break out. We're starting to get towards the long end of a typical consolidation period for the metals. So I would expect this to do something in the not too distant future. We try to break out here. I noted on one of the broadcasts that really wasn't the kind of follow through day that you're looking for. Basically, it was just like a not sure what to do day, and then back right down to support immediately the following day. So we have a descending triangle there. It's going to break. Gold is going to move. I have no idea which way. We still have a strangle on GLD for our subscribers because we don't have no idea which way it's going to go. But the longer the pattern goes like that, normally the more volatile the breakout will be. So when it does move, expect it to be a pretty significant move. But again, there's no way to know which direction. Now silver broke out. We did well on this. So we had this, and then on the breakdown, so we added to a long position. So we profited here, we added to a long position, and we've been just trying to climb up, a little bit of a stair step down, and then trying to climb back on up from here. The target price for us is the retracement to the breakout point. So remember I mentioned that when you have triangles that break out, they retrace the breakout. This should come back to 25, but again, we don't know for sure exactly when, but it will eventually get back to 25. Is that going to be in the next couple of weeks, next couple of months? It's hard to know that, but we're starting to get almost a little. So we have a descending triangle in gold, but we're starting to get almost a little quasi ascending triangle here in silver. So both of them look like they could break out in the not too distant future, and I think they will. Again, a lot of experience trading GLD with the strangles. It's not unusual to see it form these large triangles. But we are starting to get, at least historically, to a long time frame of how long it takes the triangles to form. So expect it to start to break out before too much longer. Well, Did a few different things tonight. Hope you found that informative. Thank you as always for your time. We really appreciate you spending your valuable time with us. Hope you have a great week, and we look forward to talking again next week. Take care, everybody.